The one thing that will break you or catapult you is access to capital. Santiago said it. Don't wait till you need credit or capital to get it. And starting out, that's not a huge problem because you got to start somewhere. But you got to remember, when you're asking for capital and you're trying to have a conversation with a bank, you got to look as big or as legitimate as possible. And running a business is very bipolar. It's very up and down. You have days, I've had my business since 2017. There's been a number of days, weeks, months where I'm just like, nothing is working. Like nothing is going the way you need it. You have overhead, you have rent, you have taxes, you have lease, you have all these obligations. You got more going out than you got coming in. That's why being in these rooms and networking and building with other people that can plug the holes that, what I said, that we all have is super important. My name is Mark Miller, and I own multiple companies. My main company is called Access Capital. A little bit about Access Capital. I founded that company in 2017. And I founded that company out of just a need, a personal need, trying to figure certain things out in business. I worked a 9-to-5 for Federal Express for 22 years. I was working at FedEx since 1996, started off working my way up. I've always been some type of hustler. I've always had a side gig. I've always just figured out how to make an extra dollar. And so as I got older and, got up in the corporate world, had started a couple businesses with a few other people, made money, lost a lot of money, but learned a lot of lessons. And one of my mentors, because I've invested in other programs, and he just calls that when you're not in a traditional education setting, he just calls that tuition. As a business owner, when you're paying into certain things, it's just tuition, because you're paying for the information. You guys paid to be here, so you're paying for the information. It's some form of tuition that you want to learn from, glean from, and execute. So Access Capital, like I said, was founded out of a personal need to get access to money. I wanted to start a business. I knew I had these side hustles, but I understood that it took money to really get them off the ground and, create some traction and some other things behind that. And throughout that journey, I've founded other companies, Riverside County Acquisitions, Miller Capital Group, just to name a few that have done pretty well for themselves. So, and getting into other rooms is super important. So what I want to talk about, I really want to parlay from, or just add to, but pivot from what the personal credit side is. Since this is, Credit is Power, the credit meetup, I want to talk more so on business credit, because that's where I mainly focus in. That's where I deep dive and dive my hands into my business owners. I'm also the vice chairman of the Inland Empire Black Chamber of Commerce, where I'm over 150 plus businesses. Impacting the community, educating, teaching, doing all that. So business is super important. How many business owners do we have in here? Okay, so whether you have an LLC, sole prop, C Corp, nonprofit, whatever. This is where I specialize and I get excited and I get geeked about. Because there's levels to this. There's levels to when you get the foundation for personal credit, and Santiago broke that down a lot. There's levels to your personal credit. There's levels to the structure of it. But as you start to do business, real business, start generating, because you don't have a business until you have your first what? Starts with a C. Customer. Customer. You don't have a business until you have a customer. Other than that, it's just a little side hustle. But you want to understand, as you get these customers and you start generating revenue and you start needing more capital, you need resources, you need marketing, you need to hire, you need staffing, you need equipment. That takes money. And a lot of times we grassroot these businesses as solopreneurs with our own liquid cash, because we don't understand there's a whole nother segment to running and starting a business. There's business credit, there's vendor credit, there's resources that we have not been as privy to because we think it's too hard or complicated, or you have to be a major company to have access to these things. And that's not the case, okay? You could literally be a single member LLC, just started, and still get access to 5 to 6 figures in capital for that business. but you got to back up because you can't have these conversations if your credit score starts with a 4, 5, or 6. Let's just be real. I deal with so many people that come to me and just need money. They need money. They need money. And we have these entry-level conversations. Well, what's your personal credit? Well, now that's a whole nother conversation, because they haven't did the necessary work that has been talked about in order to build personal credit. And as you see, it's not that hard, but you got to be willing to do it. You got to bet on yourself. You got to invest in yourself. And a lot of people don't want to do that. That's why I talked about, my man mentioned here, he said he heard me say something that business isn't for everybody, and it's not. I literally watched businesses fold and go under because of a lack of education, but more importantly, a lack of access to capital. Okay? The one thing that will break you or catapult you is access to capital. Santiago said it. Don't wait till you need credit or capital to get it. Don't have a huge need for it, but still want to get it, because it's nothing daunting or frustrating to need more capital and can't get it. Okay? Because I don't need that line of credit. Take that line of credit, as a reserve. The best type of money is OPM. Anybody know what OPM is? Other people's money. You have other people's money and you have OPR, other people's resources. Both are leverageable opportunities. Okay? I've always said this: you make up and leverage what you lack in you make up and leverage what you lack in ability. Okay? You make up and leverage what you lack in ability. Sometimes we don't always have all the ability to do certain things, but if you understand how powerful leverage can be, it'll take you to that next step. And having access to capital or the funds is that caveat. So, business credit. So I have this software here, and we've been working on this and have this software where it pretty much does a scan. So if you have a business, and this is a free scan for anybody, and I'll give everybody access to this. So for my business owners, that you can go ahead and get a free scan, log in, put in your information, and it will literally do an audit on your business. Because that's the one thing a lot of people have issues with. They're not structured right. A lot of people have home addresses, cell phones, Gmails, anybody guilty, attached to their business. And starting out, that's not a huge problem because you got to start somewhere. But you got to remember, when you're asking for capital and you're trying to have a conversation with a bank, you got to look as big or as legitimate as possible. You can have a home-based business, but most lenders don't want to lend to a home-based business. There's certain extenuating circumstances where they will lend to a home-based business. So if you're an LLC, a C Corp, and you have, you want this entity structure, you have to paint the right picture. You want a commercial address. You want a domain email, preferably the same name as the business or the LLC. It's called a NAP score, name, address, and phone. You want a phone that's listed in 411 in the directory. So if they Google it or look it up, you look legitimate. They're not just calling your cell phone. So that doesn't mean you can't get access to capital, because I deal with people all the time like that. But when I'm dealing with my clients that want multiple six figures in capital, it's a structural thing. It's being structured. It's having your statement of information, your corporate tax returns, your filed, and things of that nature. Again, there's levels to this, okay? So how many people are familiar with business credit? 1, 2? Slightly. What do you know about business credit?
You got a business score.
Okay.
It takes your time in business, your business credit, just like you said, your name, everything has to be structured right. And also your personal credit. Yeah,
okay. Okay. Most people have you heard of Experian Business?
Yeah.
Okay. So there's business agencies: Experian Business, Equifax Commercial, SBFE, Small Business Financial Exchange. There's Dun & Bradstreet. There's also Credit Safe. There's actually about 26 agencies, depending on the type of business you have, that report your services or your products or your terms, net 30 terms, net 60, net 15 terms to these agencies. But for the sake of time, the main ones are Experian Business, Equifax Commercial, and Dun & Bradstreet, okay? Those are the main ones, okay? So when you're starting a business, you want to be able to establish business credit, because you'll get to a point when you're actually conducting business, not just a side hustle, actually doing business. You got revenue coming in. You have a business bank account. So my business owners, who doesn't have a business bank account and has a business? So you have a business but no business bank account. Okay.
Mine is like very new though, so it's like I'm just kind of in a
But it's open.
It's open.
Okay, long as it's open, at least, because one thing Santiago talked about and I will talk about, it's the data. All of this is data driven. It's all about the data. It's the algorithm and it's the data. That's all these banks and all these agencies are paying attention to. It's the data and it's the flow of data. So when you're setting up a business and you have an entity established, you want to have a business checking account, because there's something called a bank rating. Anybody ever heard of bank rating? Your depository activity comes with a score. A lot of you guys didn't know that. So some institutions look at your bank rating. So if you keep a balance of 0 to 5, you're in a specific bank rating. 55 to the next level, 10 to the next level. There's different levels to the type of bank rating that the data will tell a specific lender when it comes to business credit. Because there's a lot of opportunities when your FICO score isn't strong enough, but you got the other data points. Okay, you have a strong score because you have good deposits, because you might be running a business that generates 10, 20, 30 grand a month in revenue. So they see that. So when you go ask for a credit line or an approval, they'll look at your deposits and say, okay, we'll approve you just off of your deposits. There's banks that will literally just approve you with terrible credit because you have bank deposits. So open up a business bank account if you're really trying to do business, okay? Go ahead.
Is any bank okay, or is there a preferred bank?
So he named most of the major ones. Chase, so there's various tiers to this. You have your national, your regional, your local banks. You always want to get with a national bank, a Chase, a Bank of America, US Bank, Citi, Wells Fargo. You always want to have one of. That's why it's important to have multiple bank accounts. And then you have certain credit unions that work for personal and business that favor certain aspects of different businesses. So be particular, have that national bank, have a regional bank, and probably have a credit union. I recommend 3 bank accounts for any business owner, because there's different products. There's different things, there's different limits, there's different transaction fees. Some banks charge you for a wire, some banks don't charge you for a wire. So don't limit yourself when it comes to your business and the footprint that you create as far as the data is concerned, okay? So this pre-scan allows you to be what I call bankable. If I'm dealing with you as a client, I want to get you to the point where you're bankable, okay? And that just essentially means you're structured with the right things in place. So we help with all these things: lender compliance, reporting trade lines, business trade lines. I'm also a data furnisher, so I can report to Experian Business and Equifax Commercial. Business credit score, becoming bankable, pre-qualified funding, search rankings, search engine placements. Remember when I said the data, it's all about the data. It's the footprint that you create when you're running a business. Social media engagements. There are certain banks, when you get to certain levels, they'll look at your social media footprint. They'll try to see what this business really does out there in the GP, in the general public. Are you actually doing what you say you do? There's 3 C's. It used to just be 3 C's. There's 4 C's now. It used to be cash, credit, or collateral. That was important. Now it's character. Because banks look at your social media to see what you're really out there doing. Because banks have been hit and they've got their ass handed to them. So they really need to pay attention to not just what you're doing, but what your business is doing, okay?
Is that something they do only for businesses, or is that personal as well?
They'll do it for personal. Some banks will actually, run He didn't talk about it, but that's where those other third-party agencies play a role in certain things, not just Experian, Equifax, TransUnion. You got your LexisNexis, you got your ARS, you got your Innovis, you got all these other ones that still tell another story on the back end. What else? So I'm gonna play a couple videos. Let me see. I'm not a Mac person. Okay. So let's just talk about, I'm gonna just talk about lender compliance real quick, okay? Let you guys listen to some of these videos. And again, everyone will have access to this that showed up. Here's the volume on this. Hold on. Give me 1 second. Jeremy, where's the volume on this? You know?
Is it not playing here?
It's playing, but I could barely hear it.
It should just be the volume on your computer.
Okay, then it's just not.
If you turn the volume up on your computer, it should control that.
Yeah, it's just not high then. Okay, it's just not that high then. Yeah. This has a.
Yeah. No, that's on. As
Okay.
far as I know, I've always controlled it from.
Yeah, it's just not high. I think he was playing on the TV. Okay. Nonetheless, all right, we're going to skip that. But again, everyone will have access to this. So you guys can go literally. You guys can go and for my business owners, you can run a pre-scan qualify. And you put in your business name, you put in your contact information, you put in all the pertinent things that associate you to that business that you say you have. And so this scan is free. So it will give you a score, it will give you a rating based on your business that you have. And it'll start to pick apart some of the issues that we all have. You know, it's not, because I look at businesses as it's like a car. Everyone has a different car here, I'm assuming, probably, right? And would it be safe to say everyone's car has a different blind spot, right? Because I've gotten different cars and, you know, the blind spot is in a different spot. So we all have these blind spots in our business, okay? We all have them. And it's not a matter of if, but when that blind spot is going to be exposed and you can't see something. So that's where I come in, and with this audit, I help identify those blind spots before you try to jump out there and get into business funding or need access to business funding, and you just wasted your time because you weren't structured right, or you missed something because you didn't have the correct address, or you didn't have your phone number wasn't listed, or you didn't have a social media presence or something like that. So there's some early stage funding that's really simple, and it literally is, if you have good enough credit, meaning this is the structure, write this down. You've been on the bureaus at least 3 to 5 years, meaning you've had established credit for at least 3 to 5 years, okay? You have at least a 680 credit score across the board. Like, that's the minimum. 720 would be preferable, but at least a 680 credit score. You've been on the bureaus for 3 to 5 years. You have at least one credit card, one primary credit card, not an authorized user card, but one primary credit card with a $5,000 credit limit. 2 would be preferred, but at least one. You have minimum inquiries, meaning you have less than 3 to 6 inquiries in the last 90 days. Everyone knows what an inquiry is, right? It's when you're going out there shopping and someone's pulling your credit, you get that inquiry. That's why it's important to do soft pulls, and he said those pre-approvals, because most of the time it's a soft pull. What else? You have some type of verifiable income, you know, a W-2 job, or, you know, you can prove your income. Some of the banks will approve you on stated income. We know what stated income is, right? You're just stating what you make, essentially, within reason. You know, you can't be like, yeah, I make $1 million a month, and be like, okay, well, you don't need us. So the important thing is banks call, write this down, reasonable access to income as substantiated income. So you can fill out an application and you can have good credit, but guess what? You don't have a job, but you live in the same household. So they ask you what your household income is, because to them, that's reasonable access to repay that debt. So you can make $75,000, you don't have good credit, but you have great credit, but you make $0. You can still apply and be honest and integral and say, I have household income at this amount. And you would likely get approved because, for one, the data is good on your personal credit. 2, you have income because of the household. Okay? So pay attention to that on these applications. Household income is everybody. I don't care if the dog bringing in bread. Everybody. And it's reasonable access. So that's, and I have this on my TikTok and Facebook. I mean, not Facebook, Instagram. It could be W-2. It can be child support. It can be Section 8 income. I mean, not Section 8 income. Government assistant income. You can be a veteran receiving benefits. What else? You can be receiving rental income. There's so many things you can justify as income. It could be distributions from stocks. It can be, what else? You might not be old enough. You might be just turning 21. You can use allowance as income if your credit is good enough. Chase is super easy when it comes to that. They allow about 15 different ways for you to say, I make money and I can repay this line of credit. So understanding how important that is when you have an LLC or you want to start the business and you have good credit. I've gotten plenty of people that have just started their business, but they're structured the right way, okay? 40, 50, 100 grand at 0% to start that business under that new entity. The entity can be 1 or 2 days old. Now you're going to be limited because a lot of the businesses that I deal with, they have revenue. They have 1, 2 years, tax returns, profit and loss, or at least bank statement deposits of revenue running into that bank account. That's why it's super important to have a business bank account, because if you haven't filed your tax returns and just say you're 6 months old, but you've been running business deposits because you're selling a product or providing a service, I can use that as income to get you some capital for that business, okay? So it's super important to understand the data and having those things in place, okay? So I wish this video would have played, but it doesn't. But the whole premise of the software, again, it audits your business. And I actually have this young lady in the bottom corner. She walks you through different steps. So she's been programmed as AI to pretty much walk you through the next steps of where you are and identify some of the issues that you might have in that business. As you go through the process, there's some free stuff that you have access to, and then there's a payment wall when it comes to, okay, now I need to get to the next level because I've done so many things, or I have these things in place, but I don't have these other things in place, okay? I mentioned to him, running a business, starting a business isn't for everybody. I know everyone wants a business, everyone wants that time freedom, everyone wants to fire their boss, everyone wants to be an entrepreneur. I don't know if everybody wants to do that, but Instagram and social media will have everybody thinking it's just this easy thing. And running a business is very bipolar. It's very up and down. You have days, I've had my business since 2017. There's been a number of days, weeks, months where I'm just like, nothing is working. Like nothing is going the way you need it. You have overhead, you have rent, you have taxes, you have lease, you have all these obligations. You got more going out than you got coming in. That's why being in these rooms and networking and building with other people that can plug the holes that, what I said, that we all have is super important. We've had plenty of meetups at this location where I've made multiple 5 figures just by being in the room with certain people because they had a solution to a problem that I might have had, or I provided a solution to a problem that they might have had. The one big thing in running a business, the bigger the problems you solve, the bigger the paychecks. So whatever that business, service, product you have, understand who you serve and why you want to serve that particular client base. And then how do I solve more problems? How do I solve them faster? You have a question? Okay. Thought you raise your hand. So who doesn't have a business in this room? Okay. So you guys want to get in business, I'm assuming, at one point, or you just here to have good credit. And there's nothing wrong with that, because having good credit, as he talked about, gets you into so many other opportunities. The house, the car. There's so many things that look at personal credit to determine. You have insurance. You have certain employers that look at your personal credit to determine whether they're going to hire you or not, or whether you're high risk or not. But as far as the business side is, if your personal credit is intact and you've spent time working on it, getting it to where you need it, and I gave you that breakdown, 680 or higher, and some of those other data points, and you do have an entity structure, definitely come talk to me, or definitely get into a position where you can get access to business credit, because it takes your business to the next level. I'm also giving out a free ebook to individuals that are here. Where my Mac people at? Hold on. I'm not finished. I'm going to show you one more slide. How to expand this? I'm just jacking this all up.
Green button on the top left.
Okay, top left, green button. All right. So the other thing I want to talk about that I'm big on real quick is shelf corporations. Anybody familiar what a shelf corporation is? No one heard of a shelf corporation?
Only on TV.
What'd you say?
I said only on TV.
Only on TV? So a shelf corporation is a real thing, okay? Anybody want to take a stab at it? What you like?
Yeah.
Take a stab at it.
Yeah, when you basically move money over to another corporation that kind of can't be traced back to you.
That's money laundering, man. No, I'm just playing. I'm just playing. No, good attempt. So, anybody else?
And maybe like a fictitious corporation just to have a face and you shelve it.
Okay, you in the room. You in the room. Go ahead.
On paper, it's 2 years old, but they're usually filed in New Mexico, Delaware, Wyoming, or Nevada.
All right, my man. Okay, so between the two of you guys, you guys got it. So, but it could be any state. So a shelf corporation, literally in this ebook that I'm giving out to you, will explain it, but I'll break it down. A shelf corporation is a business or corporation that was formed in any state, but most popular, New Mexico, Delaware, Wyoming, Colorado, just to name a few, are some of the easier states where someone or some company or institution has filed corporations and has done no business activity. And they literally just sat it up on the shelf. And it's literally just being aged. So what they're doing is they're keeping the annual reports active and current. That's super important. So if the annual report, the filing fees are current every year, that age keeps going up. So the benefits of a shelf corp, and this ebook will break that down, but I will do it right now, is a lot of times you might be in government contracting. You might try to start a trucking company. There's a lot of businesses that what's called the TIB, time in business, is super sensitive and important. And you might not have the opportunity to wait 1, 2, 3 years to engage in that contract, to start that trucking company, to do a number of things, to buy another business. We're in a season of mergers and acquisitions where buying businesses is super lucrative, and there's a lot of opportunities because we have baby boomers that are retiring and tapping out, but have no one to pass that business down to. So an age corporation gives you credibility. it puts you in the front of the line to where you don't have to wait 2 to 3 years. So now when you engage in that contract or you start this business or you're doing other things, you look like you've been in business for 2-3 years or older, just depending on how old that shell corporation is. So I have a lot of clients that want to buy a shelf corporation because when you build the business credit on a 2, 3, 4 year corporation, your access to capital grows exponentially. You still got to have good personal credit, but there's opportunities dealing with my company and a few other ones where we help build the business credit in about 90 days to where now you can go in and get what's called no personal guarantee opportunities. Okay, no PG. But most of the time you have to personally guarantee it, meaning you yourself have to sign that you agree to pay back this debt if at some point you default under the corporate entity or the veil. Usually when you default on business credit, it doesn't hit your credit immediately. It could take about 6 months to show up on your personal credit, okay? Because it'll hit the business credit first. But the shelf corporation will allow you to move to the front of the line, essentially, when it comes to, like I said, government contracts, buying a business, starting certain companies, because the banks just don't want to take that risk because you're too new. You're just an infant to them when it comes to lending. So the shelf corporation helps you get into the front of the line, look credible, look established, and get more access to capital when you're trying to grow, okay? So that's the important thing about shelf corporations that I wanted you to share. This ebook will essentially talk about that, give you the ins and outs. I can't play the video because it's not going to play, but it has a link to where there's a list of shelf corporations that we sell. Let me see if I can expand it. This is where I love my tablet because I can just touch it. But the link will have it. And so like he said, you know, essentially Wyoming, 2007. There's specific reasons why an individual will want a corporation that's been around since 2007. They're trying to make some big moves. They're trying to buy some commercial building. They're trying to take down some type of real estate. They're trying to do something where they might have to do some SBA funding, you know, things of that nature. So, I mean, I have them from 2007 all the way to 22, 23, New Mexico, Montana, Wyoming. A lot of these places, you don't have to pay state tax. So I'm not a CPA, but if you get with a good CPA, they show you how to layer and mitigate your tax liability and responsibility because you have what's called a foreign entity. So you can establish a footprint essentially in another state and benefit from being in that state. You don't live there, but you've established some type of footprint because what? Your business is established there. So there are certain banks that you have to live, work, and worship because of geo restrictions. But if you have a Montana, Wyoming, New Mexico corporation, and there are certain banks in that region, now you get to apply for those banks. Why? Because you're established there. You live in California, but my entity is over there. So that just gives you more banks to choose from. You understand? That's one of the hacks that a lot of people do. A lot of people set up their corporations in multiple states that normally they don't have access to because they live in one state, but they've created a footprint by way of the entity or the corporation to get access to these lenders, okay? But that's as you grow and you're starting to scale and you need more capital, okay? What else? Any questions? No questions?
That's why you see a lot of the high-end cars with plates in those states.
Yeah, because they don't pay sales tax. They don't pay sales tax on that. Go ahead.
So that's basically like business trade lines, right?
Well, so this is the actual shelf corporations. They're different names. So if you don't like this name, and don't get married to a name. Don't get married to the name because you can always establish what's called a DBA, or just use this as a holding company, and this company manages the name you really want for your corporation, and it's layered. Okay. But the trade lines is something else that I'll show you guys. It's also in the ebook. Close this out. I get back to my PDF. There we go. Oh, no. Right there. So this here is the list of lenders that help you establish business credit. So you can go through a traditional tiered out process. You have your entity set up for those that have it, and you want to start building business credit. Level 1, I broke down which banks that will allow and extend you credit and where they report to. Dun & Brad, Experian, Equifax. Some are net 30s, some require no PG, some require a PG. Now what did I say a PG was? Okay, that's doing what again?
Attaching yourself to the debt.
Yeah.
Okay, exactly. So there's some banks that don't require no PG, okay? And so there's a number, I have 23 here, Gas Cards, Murphy, Creative Analytics, WEX, different ones that you might not need per se to operate your business, but you want them anyway because business credit is all about building out the thickness of your file. It's showing lenders that you have the acumen and the responsibility of managing multiple accounts, okay? A lot of these, it might not even benefit your business directly, but you want to get it, buy something, pay it off, and then generate a score and then go up to the next level. Again, like I said, there's levels to this. Then there's level 2. As you do 1 or 2 of those, you wait 45 days and you apply for 5 lines in this particular section. The key to doing this, if you, like Santiago gave you a sequence on the personal side, right? With those different credit cards, same scenario. Same scenario. There's a sequence to building business credit, and it's a process. And, you know, ideally, if you do it organically like this, it can take you about 3 to 4 months to really have 10 to 15 accounts on here. But the beautiful thing about that is you can get to a point where you can get, if anyone does Airbnb in here?
I'm starting.
Okay. So I've done Airbnb and I've done corporate rentals, and I've done them in the business name without me signing for it. And that's the beautiful thing, because when you're trying to do rental arbitrage and you don't want to sign your name and have them pull your credit and you be personally liable, now your entity can have that conversation. Your entity is qualified. Go ahead.
So I have a room and board. Is it almost like the same thing? Because I don't know anything about business.
Okay.
And so I have a good amount of money coming in. I start in October. But what I'm doing, because most of them are giving me cash or personal check under my name, open the LLC. I'm just keeping it like this because I don't know what to do with the business. Now, do you guys work with people who are starting? Because right now with you, I'm actually working on my personal credit, but I don't know how to separate. And I have a CPA.
You need to fire her.
She's not. Yeah, I am gonna fire her.
I'm just telling you.
I'm paying her a good amount of money. My business is pretty small.
Doesn't matter.
I found out she had surgery, and I'm still here waiting for my tax info. You know, so it's like I'm just like, you have to go at this point.
Yeah.
Because it's already
Because she's costing you. She's costing you money, and she's exposing you to more liability.
So I have money being put in my personal. And I just put like a certain amount in that business just to have it. But I'm like,
if anything, if this is the business, you want all that money going into that business, and then your structure to receive distributions from that business. You're paying yourself from the business.
Because right now we're focusing on myself. So, you know, I do the hospice social work, but I was able to make myself an S-corp in December. That's how I reached out to her, through Mark, the big guy, Mark Kohler, or Mark, he's a YouTube.
I know what you're talking about.
Through him, that's how I found this lady. So we're supposed to be working on me to do that, because now I'm an S-corp. But there's nothing, everything's just there. She's not doing anything. And because she's not doing anything here, I don't even know how to touch.
Yeah, I mean, I'll have someone for that, and that's the beautiful thing. I have a number of resources, me being part of the chamber and just being part of the community. So definitely just connect with me so I can point you in the right direction. But you're definitely missing out on being able to build that bank rating score.
Yeah.
Remember, because it's all going in your personal checking account. You want that in your business bank account. So now they see this revenue for 3 months, 4 months, and you go to Chase, Bank of America, some of these other banks, and you have a relationship. So there's one hack I want to talk about real quick with Chase.
And they call resources, not hacks.
Yeah, resources. I told you that. Somebody, who told you that? I told you that. I did. So there's a resource with Chase. In addition to just the 524 rule, I'm a COI. I'm a center of influence with major banks. So I have access to the underwriters and a lot of the criteria. So Chase, if you have a business checking account and you keep a minimum of $5,000, write this down. Y'all looking at me. I got this. Y'all need this. You keep at least $5,000 in that checking account, that business checking account, okay, for at least 6 months, okay? $5,000 for at least 6 months. And you go to Chase and you ask for what's called a block, a business line of credit, okay? It's not a loan, it's not a credit card, but it functions like a credit card. It's revolving. You can draw from it. Usually they give you checks or you can just transfer large sums of money. But they'll give you up to $100,000 business line of credit if your business is 2 years old with no tax returns. Okay? But that's because you created an internal relationship. And there's internal information you need to understand. A lot of these banks, that's why Santiago stressed it, developing a relationship on a personal side. But you business owners, you guys need to develop a relationship on a business side. Drop some money into these business accounts. Start running your revenue into these business accounts to create that bank rating. So when you go ask for a line of credit, when you go ask for a business credit card at 0% for 18, 22 months, when you go ask for these products, you're getting approved because personal credit has been established and it's solid, and the business relationship, your NAP score, your structure, your compliance is all on deck because you came to see me. All right? And that's it. So any questions?
Can you elaborate on the not having the tax returns?
So not having the tax returns is another major thing because I deal with a lot of clients that come to me and they want access to more capital, but they don't have tax returns or they do have tax returns, and we've done what most of us have done all of our lives is claim losses. At least when you have a business, you wrote everything off. So if you wrote everything off and you go to a lender and you're asking for 50 to 100 grand and you show a loss on your line 31 on your Schedule C or 1120S, you think they're gonna lend you money? You look like you need to be on welfare. You don't make no money. But we're so excited to get a refund because we've let Uncle Sam hold our money all year and then they're gonna be like, okay, I'm gonna throw you a bone. That's the importance of establishing an entity or a business, because the tax laws were structured for entities, not me and you. They were made for business owners. And I talk about that on my YouTube channel and some of my last posts. Understand the tax laws. It's all about understanding the tax law. Okay, it's free information that's out there. It's not a secret. It's we don't understand it, or we haven't gotten with a tax strategist. Nothing against people that prepare taxes, but if you just prepare taxes, that's not going to keep money in your pocket as a business owner. You need a tax strategist, someone that focuses on, hey, did you do this? Did you do advanced depreciation? Did you do cost segregation? Did you buy a property? Did you buy a vehicle? All those things. My vehicle, I haven't put a vehicle in my personal name in the last 7 years. My BMW M6 is in my business name. So there's ways and there's levels to do this, and you get to write that off as a business expense. Okay? Any other questions?
So just a little bit more elaboration on that one. How is it that you have a business but you're doing no taxes for 2 years? That's just kind of...
You want to do taxes. So if you have a business and you're making some type of money, you want to report that money.
Right.
Yeah.
But you said you have no taxes for 2 years. on this one, the one with Chase?
No, they won't ask for tax returns if you've kept that balance, because there's certain things that trigger the algorithm that won't trigger them saying, hey, we need a 4506T.
Okay.
Hey, we need your first year's, your personal and business tax returns. That's why it's the same thing. If you create the relationship with certain banks, they'll just instantly approve you because they see you have a little bit of money sitting in a bank account
Gotcha.
For a certain amount of time.
for a certain amount of time.
Misinterpreted. I thought you said you ain't got no taxes for 2 years.
No.
How you get away with that one? Let me know about that.
No, not that. So it's the relationship, it's the data. It's the picture you paint, it's the relationship you create.
So that kind of threw me off, but I'm glad you asked that. So in the instance that I'm asking this question is like, you start a business late in the year, and then you don't have enough time to actually report positive income when tax season comes around. So you're forced to report a loss for that particular year, right?
Mm-hmm.
But then the next 2 years, you're reporting positive.
Mm-hmm.
Does that initial negative cause you anything in the future?
No, because they'll look at the history. They'll look, you started in 2021 or 2022, you didn't make no money. 23, you started turning that curve, making some dollars, reporting positive income. 23, 24, you was on the upside. So banks, they're not stupid. They understand that you had to start somewhere.
Yeah.
You know, but there's even a point where this is more detailed, what's called EBITDA, to where you can have your business and say you made $1 million in revenue. There's a difference from revenue and profit. We understand that, right? Because I've seen $1 million in revenue multiple times in my business. It's the profit. But the revenue, the top line revenue, line 1 through 7, is super important because it's leverageable. Your lines 31 and things of that nature is your gross profit. But then depending on what type of business you do, whether you're in trucking or you have equipment, manufacturing, whatever, and you have all these deductions and it shows a negative, you're able to put that deductions back into the business to qualify for financing. Okay? That's why a tax strategist will tell you, okay, if you're going to have all these deductions, and these deductions are legitimate deductions, and it puts you into a negative here, but you're able to put back the fact that you pay for this and you pay for that and you pay for that, and it puts you back in a positive aspect. Now you qualify for that particular product. Whether it be you're buying a house, you're buying a piece of equipment, there's so many different things. That's why you guys need to get with a good tax strategist or understand how your business works and understand what we talked about the other day at a mixer, knowing your numbers. Knowing your numbers, knowing your business in all 4 seasons is super important.